Charlie Munger has had a big impact on me in moving me toward looking for wonderful companies at fair prices rather than fair companies at wonderful prices.
Hey guys, welcome back. Today we're going to be looking at Sydney Airport Holdings Proprietary Limited. They are listed on the Australian Stock Exchange under the ticker code SYD. I'm sure you're all very familiar with Sydney Airport, as it is the biggest airport here in Australia, and they've been around here since 1919. In particular, we're going to be looking at what has caused the share price to just fly sky high over these last few days. They've gained around 35 to 40% in value, whereas over the last sort of year or so, they've been fairly steady, not really doing a hell of a lot. A little disclaimer before we kick off today, guys. I am actually currently a shareholder with Sydney Airport. I bought a position with Sydney Airport around this time last year, as I seen them as being trading below intrinsically what they were worth. And it's not very often that you have a good company like Sydney Airport with a good competitive advantage trading below what it's essentially worth. There's no huge growth to be made, I feel, from Sydney Airport, but it was essentially a 50-cent dollar, as Mohnish Pabrai loves to call it. If you're familiar with Mohnish Pabrai, you understand that little terminology there. But basically, you're buying a company for 50% below what it's intrinsically worth. And I believed at the time that that's what Sydney Airport was. So that's what we're going to be breaking down into today's video. What has caused this to go up dramatically? By no means is this a buy recommendation for Sydney Airport at all. Just having a quick look over a couple of different articles around Sydney Airport. So it's very key if you can find a good company with a good competitive advantage, with a super wide moat that's very hard for business to replicate or steal any business from them, the better off you will be. Capitalism is brutal, so if you have a good competitive advantage around you, a good moat essentially, that will keep away those evading different opposition. So anyway, here's your little write-up on Sydney Airport, and like I said, this is dating back to 2017. So Sydney Airport, a valuable facility you own which cannot be replicated or replaced, is a viable way to earn market-beating returns for investors. As Sydney Airport has shown over the past decade, if you're visiting Australia's capital and economic beating heart, you have no choice but to use Sydney Airport. Well, you could land in Brizzy, like they say here, and drive down, but why would you? With the growing inbound tourist traffic from Asia and only one airport in the city, Sydney Airport has a very strong competitive advantage. And also, they're talking here about the other airport that they're looking at building, I think, which is penciled in for 24, 25 potentially. Don't quote me on that. So that's just a little quick article there, guys, around moats and things. We'll just have a quick look what Warren Buffett has to say around moats, and then we'll have a look at what's actually happened with Sydney Airport. Sydney Airport's share price over these last few days.
Yep. What are the key indicators you look for within companies before making an investment?
Well, I look for something that does give them a moat around it. We have a company called See's Candy out on the West Coast. See's Candy is boxed chocolates. If you give a box of See's chocolates to your girlfriend on the first date and she kisses you, we own you. We can raise the price tomorrow and you'll buy the same box. You're not going to fool around with success. So the key there is the response. You do not want to go home on Valentine's Day and say to your wife or your sweetheart, preferably they're the same person, you don't say, here, honey, I took the low bid. It doesn't work. Price is, to a degree, is immaterial. If you've got an economic castle, people are going to come and want to take that castle away from you. And you better have a strong moat. You better have a knight in the castle that knows what he's doing.
So anyway, the Sydney Airport Holdings Proprietary Limited, ASX SYD, share price closed on Monday, trading up 33.91%. So closing out Monday at $7.78. And over the last year, since the closures of worldwide, the share price hasn't really done a hell of a lot. You can see here, back in April, they were sort of trading around that $5 mark, just below, I think, at one point. And then here, just on Monday morning, boom, she went up that 33% that they were talking about. So that's what we're going to be looking at here, what has actually caused this, and whether or not this is a good thing. Obviously, it's great if you're a shareholder and your share price has obviously gone up substantially over the week. So anyway, the Institutions Circle, the unsolicited and conditional offer, proposes the acquisition of 100% of Sydney Airport shares for $8.25 per share. So obviously a lot of institutions now are piling into Sydney Airport, which is driving the share price up. This is a 42% premium to Sydney Airport's closing price on Friday last week. which approximately values the company at around $22 billion. The offer was made by a consortium, not a word I'm super familiar with, consortium. So I actually had to look that word up. But basically, it's a conglomerate or a group of investors. I had a fair idea what it meant, but I had to check it on it. Of institutional infrastructure investors, including IFM Australia, IFM Global, QSuper, and Global Infrastructure Management. Acceptance of the deal is subject to a number of conditions. Management cautions against the first offer. So I actually did read through the company's announcement as well, and it's very brief. But they're not just blatant taking this. They're thinking, oh, well, maybe we could look at it. They're looking at it, but nothing is finalised yet by any means as well. But it's just it has driven the share price up substantially, a lot more closer to what it's probably should truly be sort of worth. The board noted that offer was made in the midst of a global pandemic, which has deeply affected the aviation industry and the Sydney Airport security price, which is bang on the money. The offer is below where the Sydney Airport share price traded prior to the pandemic. Given the board's opening comments, it seems more unlikely than likely the offer is accepted. However, this may open the door for a revised offer or the potential for new bidders to emerge. Infrastructure. I found this part of the article very interesting. So infrastructure replaces bonds, with the majority of central banks' interest rates below 1%, even negative in some cases. Investors are turning to infrastructure assets as a more substitute for bonds. So a lot more of a safe haven, something that's reliably paid dividends, which Sydney Airport has historically. Obviously now things are not so, but if you look at a bit long term in the next 5 years, obviously worldwide travel will return. No one's certain of how that will look on the other side of this pandemic, but it's a given that travel will return at some stage. No one just knows exactly when that will be. But as the vaccines get rolled out across the world, you can take a calculated guess on when you think that may be. So bonds and infrastructure share similar characteristics such as predictable cash flows and low relative volatility. Moreover, infrastructure assets often command a monopoly market position, increasing barriers to entry for competitors. As a result, infrastructure assets are hot in demand and valuations are rising sharply. Just last week, a consortium, there we go, consortium again, comprising of the Future Fund, Commonwealth Superannuation and Sunsuper purchased a 49% stake in the Telstra Corporation, TLS. I'm sure you're all very familiar with Telstra as well, but their share price has increased quite a bit over the last few weeks as well. So Sydney Airport is particularly attractive to investors due to its 99-year long-term lease concession with the federal government, which expires in 2097. So you've got a fair old runway there. The lease is not about to run out anytime soon. So his take on this whole matter is, it has been 16 months since airports were bustling with travellers. I don't know if any of you have been through Sydney Airport or Melbourne Airport over the last year or so, but it is eerily scary how quiet it is in there. When I was returning back from Japan from our winter season last year, we actually come through Sydney Airport and it was a ghost town. It was so weird coming back through something that is usually flat chat, people everywhere. It was definitely not like that at all. So conversely, once borders reopen, there'll be a surge in leisure travel abroad as families reunite. So look, like I said, no one really knows what the other side of this is going to look like, but you can take a fair guess and think that people will want to jump back on a plane and travel again as well. To what extent consumer habits have changed is largely unknown, therefore forecasting and determining a valuation on Sydney Airport shares is difficult, but you can still look out, like I said, in a more long-term scale, and things will return. But it's more of a long-term play. This is not something that's going to double overnight or anything like that. So don't think that. And that was never my intention with this particular position. I was looking at something I would hold for a while until it got more back up to closer to its intrinsic value, then maybe look at moving it on then. But as it stands, I haven't sold my position yet or anything like that. Just very interestingly watching it closely to see if this deal takes place, or if there's other bids on the table or anything as well. So the last full year of uninterrupted travel, Sydney Airport paid a total distribution of 39 cents per security based on Monday's takeover proposal of $8.75. This values the shares at 21 times financial 19's distributions. That is dividends paid back to shareholders. I believe this valuation does not accurately reflect the value of Sydney Airport given its dominant market position and asset backing. I also think if a bid was to be accepted, it would have to be a home run. Sydney Airport is the only remaining Australian airport that is publicly listed and a staple of many portfolios. And that is true. If you look across any different ETFs or even AFIC as well, for example, they have a pretty good position with Sydney Airport as well. So he expects Sydney Airport shares will continue to hover around the $8 range and in the near term, and the near potential for new bidders to emerge. So there may be other companies that we're looking at putting in bids as well. So we'll just have to wait and see. Anyway, guys, we're going to wrap that one up there. I'd love to hear you guys' thoughts on this. Are you currently a shareholder with Sydney Airport? I think this is a pretty good outcome for Sydney Airport. Be interesting to see, how it all sort of plays out. I probably will be following it pretty closely. If you'd like to see future videos of this, make sure you hit that subscribe button. That way you can stay up to date, as I will be following this probably quite closely, I would say. With that said, guys, hope you enjoyed today's video, and we'll catch you guys in the next video. Cheers, guys.